I am a price action trader, although I also listen to the fundamental factors going on in the world, because it's the fundamentals that determine, that help us, that form the candles that we see on the price charts. Like that should be known by every trader, that if because of fundamentals we see price charts. So this is gold. Gold has been trending higher. If you look at this gold, let me try to minimize my chart. You see that gold rallied much higher. We got some short-term wedge here, and a falling wedge was a sign of bullish continuation, and it did not hesitate. On the December around 23rd, gold broke out of this wedge and rallied much higher. It broke the 1517.33 resistance, which turned into support the following day, and went ahead to break 1550 to 1552 resistance, and rallied all the way to 1610. Remember that time this rally was because of when we had America bombing, when that major guy was killed in Iran. For those who have been following the politics, when there is war, the gold normally rallies. Gold buys in terms of war, because it's safe haven, and investors normally tend to rush their investments to gold. They buy gold in times of war to protect against their money, their portfolios, and their investments. Now, way forward. Today, Monday, when I woke up, reading through some blogs, I saw that they're saying that China and America are again back close to signing a trade deal. What does that mean? It simply means that the demand for safe havens starts to decrease. Every time there is a peace going on and they're trying to sign peace agreements, especially between China and America, the demand for safe havens decreases. That's why today, for those who are looking at your chart, you're seeing gold. You're seeing gold selling since morning, since you woke up, or since the markets opened for the commodity. Gold has been selling. However, what do we see? Whereas gold is selling, it's coming to a very serious support level, the 1550 to 1552. Now, for as long as gold is still above that support area, we have to favor the potential for buying. So I'm looking at the selling simply giving me a buy opportunity into 1550. Why it's important for someone to buy at very good levels is because it enables you to have a favorable risk to reward ratio. At the same time, you will easily know when you're wrong and when you're right. I will buy gold at around 1550 because I'm looking at it retracing to that level. When I buy it, of course, I am a daily chart trader. I'll wait for a daily close. Should gold fail to close the day back above 1550, that would signal that sellers want to push the commodity even much lower. But as a price action trader, I respect the buying potential gold has while above that support area, keeping in mind that the uptrend that began is still much intact. At the same time, the NFP released on Friday gave us weak data, and that data meant that we have a weak dollar. A weak dollar means that we are supposed we have to sell the dollar. That means we should be buying gold. Additionally, if I look at the candlesticks, Thursday and Friday almost gave me a bullish engulfing. I think it confirmed to a bullish engulfing, and that's a good sign to buy gold from 1550. It's important, like I've said, it's very important to have very good entries such that you will minimize your losses just in case you're wrong. Trading is a business of probabilities, so we basically look at the odds. We need to take a trade where the odds are more in our favor. So as for now, I still favor buying gold well above 1550. Should we get a daily close below 1550, then I can consider selling But as for now, we are buyers. Thank you.